Welcome to the AACFB's 2026 Meet the Funder webinar series. My name is Monica Harper. I'm the Executive Director of the AACFB, and I'll be your host. Our presenter today is Carl Brabander from IOU Financial. IOU Financial is both a funding source member and a silver sponsor of the AACFB, and I'd like to thank them for their support of the association. Before I turn over to Carl, I'd like to go over a few items to make this webinar more enjoyable and informative for everyone. During the presentation, you should see a Q&A box that allows you to ask questions. If you have any questions during the presentation, please submit your questions in the box and they will be answered by the end of the webinar. The entire webinar should take no more than 30 to 45 minutes. And for those of you who would like to review this at a later date, it will be posted on the 2026 Meet the Funder page of the website, and it will be emailed out to the AACFB membership. At this time, I will turn it over to Carl. It is all yours.
Thank you very much, Monica. And thank you for the opportunity. By the way, my audio froze there for a minute, for a few seconds during your introduction. So I hope we don't have any further issues. But if we do, please make sure you let me know right away, Monica. But yeah, thank you. And I enjoyed, by the way, over the last 10 minutes, I enjoyed hearing from you a little bit about the upcoming events this fall with the AACFB. It's always incredible to me how productive the events are and the conversations. The friends I've made over the last year and a half at the AACFB events have been very productive and very fruitful. And we're all very grateful, Monica, for all that you do. So yeah, welcome everybody. I just thought I'd give an overview of IOU. Who is IOU Financial? How can we work together? IOU Financial is not involved in equipment finance at all. IOU Financial is a one-trick pony that does term loans, but as you'll see over the next 15 minutes, I think there's some very productive ways that we can collaborate and partner together, and that's what I'm hoping will come out of this event. Will be a few productive partnerships. So today's agenda will be taking you through some case studies and some interesting market insights and land on partnership models. But first, I want to just give you a little bit about IOU Financial. My question to you today, as equipment finance lenders and brokers, my question to you today is, you have funded their equipment, you have financed their equipment. Who is funding their growth? Right? So that's the question generally that I have for you. The reason being that IOU Financial has been around a long time. We were founded in 2009. As I say, we are a one-trick pony. We have one product, and those are short-term loans for businesses. I'm going to get into more details on the product side in a moment, but our operations are based in Atlanta, Georgia. We have about 100 employees. We have done about $2 billion in originations since founding. And we were publicly traded until 2023, but now we are privately held by a fund managed by Neuberger Berman. So we went private, and it's been a weight off our minds not to have to do all the public disclosures as a publicly traded company. But as many of you know, it's a different ballgame with private equity. It allows us to be faster and focus more of our efforts on these types of partnerships and these types of distribution models, right? So as I say, IOU is a one-trick pony. We have one product, and those are term loans. Our loan amounts start at $30,000. They go up to $1.5 million. Our terms go from 6 to 24 months. We have different payment schedules, which includes monthly, bi-weekly, weekly, daily. Just a question of preference, really. And our product, our pricing starts at 11 points for a 6-month term loan and goes up to 31 points for a 24-month loan. So those are for people with great credit. And these are the prices before you, the broker, add your commission. So that gives you a rough idea of where our pricing lies, which is, I think, a very competitive pricing. We will happily fund first and second positions, and we can pay off up to 3 positions in order to work with your client. We do soft credit pulls only. We do not file UCC liens up to $500,000, and we offer up to 100% interest discount for early repayment. I can go into more detail on that a little later if you guys are interested. But I will tell you for equipment financing, you may be asking, why would you not file a UCC lien? And our answer to that is that we are not in the business of generating leads for MCA brokers. What we found was that we used to file UCC liens, and what we found was that the public disclosures were essentially were a lead generating source for a lot of brokers in our industry. So we stopped doing it. So we're sort of migrating more towards the high end of the market and partnering with equipment finance brokers. We will take care of the renewals for you, and we will pay you the full commission on the full renewal amount of your loan. And of course, we have preferred industries such as construction, manufacturing, healthcare, waste management, medical, dental, restaurants, hotels, motels. Those are preferred industries. Of course, we fund a lot more than that. So that's just a real quick overview on our product. Again, we're a one-trick pony, but because we work so closely and for such a long time with our broker partners, and we have earned a 4.9 out of 5-star rating on Trustpilot from our merchants, from the clients. And I'll show you our broker score later, but it's equally high. The point is we put a great emphasis on building quality long-term relationships. And we have funded just about every industry in just about every state. As you can see here, we fund a lot of deals in Texas, California, and Florida. As you can see on the industry chart, there's the retail and construction and wholesale, but we fund a wide range of industries. And, it's just to give you an idea of the diversity of our book of loans. Of course, we do have 7 or 8 states where we don't do business. I think Wyoming is one of them. Hawaii might be another. I can go into more detail on that if you like later. But just to give you an idea, we are a national term loan provider. And what I would say to you is, here are the not forbidden states, excuse me. So this is an interesting map. These are the states where there are extra commercial financing laws implemented state by state. And these laws affect things like what type of lending products can be sold, how are the disclosures done, whether those products would disqualify a client for an SBA loan, et cetera. And the reason I show it here is because this doesn't really apply to IOU, because our product, once again, is a term loan. So there's a lot of reasons why it makes it easier to do business with. So not only do we not require any collateral, we do not file UCC liens. We're fast, so within 1 or 2 business days, we can get your client funded with a term loan, by the way, of up to $1.5 million. And unlike many of the, how would you call it, growth capital providers, unlike the MCA providers, we offer fixed payments, so they don't fluctuate with revenues. We offer fixed responsible amounts that can be paid back. And because of that, our product is SBA friendly, meaning it can be paid off by an SBA loan. And once again, we're not limited, we're not constrained by the growing number of state-by-state level restrictions. As you can see on this map, this map may be outdated. This is about a year old, so it could be that there's more red on the map now than there was a year ago. But all that to say that's why we're confident in structuring our product as a term loan and working with equipment finance brokers to provide something responsible. We did a market survey. This is interesting. We asked clients, how favorably do you view these different products? So starting on the left here, 59% of borrowers said that they have a favorable view of an SBA loan, and no surprise there. Business owners who are looking for growth capital would love to qualify for an SBA loan first. But just below SBA loan, we have equipment financing and short-term loans, basically, almost neck and neck there at 41 and 39% favorable. So I wanted to show you this to make the point that our short-term loan product is viewed on a practically equal basis as the equipment finance category. So in other words, pitching your clients on a short-term loan to help them invest in growth should be well received compared to pitching them on, for example, a cash advance product. So that's on the right there. Only 21% of borrowers have a favorable view of cash advance products. So again, the point of this chart is to show you that IOU's short-term loan product is a good match for the equipment finance sector because your clients view them on a very similar basis. These results, by the way, all come out of our annual small business survey, which is published on our website. And we have some, I wanted to share with you a couple of other data points here that you might find interesting. So 87% of business owners when we surveyed last year felt positive about their business. And this was up from previous years. As you can see here, going back to 2022, when we started doing this survey, last year, we saw the strongest sense of, the strongest positive outlook that we had seen in since the beginning of COVID with regard to their business. And not only do they feel positive, but 77% plan to invest in growth in the next 6 months. So this is important because, to invest in growth obviously requires money. So a lot of that is going to come from lenders like IOU Financial or equipment finance providers like yourselves. We asked the clients that ended up being funded with IOU Financial, what did you use the money for, or what was the purpose of the loan? And I just thought this was interesting here. Of course, you have expansion and inventory and staff, etc. But a quarter of our clients are borrowing money from us to fund equipment purchases. So I'm showing you this to make the point that we probably have a lot of common ground in our customer base. And so that leads me to, well, here's a case study. Here's a client that had already secured, he had built a manufacturing facility and he had expanded and secured some equipment to help they were commercial fabric cutters and sewing equipment that he was using to provide uniforms to a wide range of industries. And he saw an RFP for a massive contract to provide over 500,000 aprons to a national retail network, right? The aprons were colored orange, and I could tell you the network was in the home improvement sector. And then he won the contract, and all of a sudden he needed to purchase bulk quantities of fabric and hire staff to deliver 500,000 orange aprons. So he needed growth capital fast, and that's where we came in. So he had the equipment, but he needed $450,000 over 18 months. He wanted to pay it back over 18 months to buy the textiles, get paid on the first order, and essentially fund the expansion of his business. So we got him $450,000. He paid it back over 18 months in biweekly payments, and he was funded in 3 business days. So Evan, the owner of this facility, is a happy repeat client of ours, and he's a great example of the opportunities that are out there for your clients, for your equipment finance clients who are expanding and then need to invest in growth. I think there's a lot of Evans out there, and we want to help you capture that business. This is sort of interesting maybe for you. We did a survey of, again, clients that were funded by IOU, and we asked them, how did you start your search for growth capital, right? And 63% of them basically started on Google search. 12% got a cold call from a broker or a lender. 8% had a friend refer them, et cetera, et cetera. The point here is not so much, by the way, online search is oversaturated. Cold calls are a waste of time. Referrals probably, I believe, in this sector here have the most growth potential. I'd be happy to talk to you about that offline and share some of the results that we have. But my only point in sharing it with you here today is to show that, you don't have to. Most of the brokers that sell our product are investing in online search and cold calling and social media and direct mail. The point here is that you already have the equipment finance clients, and it looks like about a quarter of them may also be interested in growth capital to invest in their business. So why not leverage these leads, right? Why not test the waters and help IOU provide you with offers for those clients that need to invest in growth? Okay. So yeah, once you finance their equipment, who is funding their growth? Well, by the way, we have two partnership models. If you're a broker, we can get you term loan offers, usually within 1 or 2 hours of receiving the application from you. And because you're an equipment finance broker, we will give you preferential pricing. And we can also get you on our pre-approved offer program, which is there's a bunch of interesting benefits there. Essentially, we can give you criteria that would allow you to send out pre-approvals on our behalf. And we can also get you access to our 100% early repayment discount where clients, basically, we will waive 100% of outstanding interest when your client pays us back in the first 90 days. If you are a equipment leasing specialist, if you're not a broker, what we can do is partner with you and provide you with the full customer service, provide your clients with the full service, from nuts to bolts treatment to handle your applications and fulfillment and simply generate referral revenues for you. So I said I was going to come back to these Trustpilot. So on the right here, we have an average score of 4.9 out of 5 on Trustpilot. So those are our borrowers. And we have a very high renewal rate, by the way, very high repeat customers. So we pride ourselves on that. But also on the left-hand side here, we see the delighted score. This is the score that our brokers give us. So we have a 100 out of 100 positive rating from our brokers via Delighted. And again, we've been in business since 2009, and we really take pride in building these long-term relationships. Here's one more case study. You might have seen this, or you might have heard this from me before if you saw my presentation last year. But I like this one. So this is a fellow named JB. He lives near our office in Atlanta. He owns a very small manufacturing facility and produces his own hot sauce. It's really good, by the way. It's called JB's Best. It's sold locally in the Atlanta area. But he also has a white label program. And we were talking, and he needed money to invest in his business. He needed money to buy some equipment. And we struck a deal with him where we were able to get him a few $1,000s in structure it as a term loan. But the payment arrangement was unique to JB. He paid us back in hot sauce. So if we've met at the AACFB events in the last 2 years, I've probably given you a bottle of hot sauce, and I hope you enjoyed it. And that's where they came from. Those were loan payments from JB. So we were saying turn up the heat with IOU Financial, but unfortunately, we're no longer. Our loan was paid off by JB, and we had a box of hot sauce in shipping. We had a box get damaged and cracked, and there was hot sauce all over the conference tablecloth and all over the FedEx office. And basically, they're heavy and they're fragile. And JB he makes great hot sauce, but he did a very poor job of packaging them. So we switched to charging cables. So I'm going to say, let's connect. Here's my email address. Here's my full contact information if you scan the QR code. Of course, we have a Q&A session now coming up. I'm always available to chat with brokers and leasers, answer any questions you may have, always looking to make new friends in the industry. So please don't be shy. Let's connect either now or sooner or later. But let's talk about how IOU can provide you with term loan options for your clients that will help them grow and will help them stay off of Google and stay out of the MCA world. Let's keep it in the family, and let's work together, I guess is my pitch to you. So thank you very much. And Monica, I guess it might be time to turn it back over to you for the Q&A.
Yes, and just as a reminder, if you have a question, please, now is the time to type that in the Q&A box, and we'll get that answered for you. Paul has his hand up. So Paul, I'm gonna unmute you if you want to ask a question.
Hi, Paul.
The hand up was an error. I enjoyed your presentation, though. Thank you.
Awesome. Well,
Thanks,
do you have
Paul.
a quick joke for us then?
I wish I could tell jokes. My sales revenue would soar if I did, but they usually go sideways. Yes.
Well, we're glad you're here. Thanks, Paul. We do have a question. What is the minimum FICO score to qualify for a loan?
650.
Perfect.
Actually,
And
640. Actually, 640.
okay.
Yeah.
And what do they need to get approved to partner with IOU Financial?
It's pretty simple, but if you write to me, I'll send you a link. You need to create a profile in our system. And we're going to need you to sign an agreement. And then we're going to need a copy of your driver's license and your last W-9, I think that's everything we require. Once we get all that, it's usually we get you set up within 24 hours, and then I can introduce you to a dedicated account executive, and I can show you everything you need to get up and running right away. It's real easy.
Perfect. What about credit profile, type of credit accounts, minimum number of accounts?
Well, I'm not sure if I'm gonna make some assumptions. I'm not sure I fully understand the question, but we look at FICO score. We look at the FICO credit score. That's the only credit score we look at, personal credit. Actually, we look at business credit for larger loan amounts as well. But we look at FICO personal credit. As I said, it starts at 640. And it affects our pricing, right? The higher the credit score, the better our pricing. I'm sorry. Does that answer your question, or maybe I didn't understand what you meant by credit profile?
I guess if that, yeah, please
Maybe
ask
you meant
a clarifying question if that didn't answer it to that person.
Sure. And just to clarify, sure, of course, we're not just looking at a credit score. We're also looking at 3 months worth of bank statements, right? So we look at what are the average monthly revenues? What's the average daily balance over the past 3 months? What's the credit score? And based on those 3 factors, we try to figure out what can this client afford to pay back? What is a responsible loan amount? What is a responsible payment amount based on that information?
That was the next question was bank statements or P&L, and you mentioned you look at bank statements.
Bank statements. Yeah.
Right.
For a larger loan amount, like if the client qualifies for over $400,000 or over $500,000, we would also want to see last year's tax returns. But we don't look at P&L. We don't look at financials.
Okay. So what are they want to know what are all the documents that you need to see? So I guess if you have a list of them.
It starts as simple as, like, I think up to $150,000 loan. All we need is a completed application and 3 months of bank statements. Once we get over 150, we may want to look at the client's W-9. Let's see, over 300, I think we maybe require tax returns. I mean, I'll provide you with the full guidelines, of course. We do require more information as the loan amount goes up. If we're talking about a $1.5 million loan, we're going to be looking at 6 months of bank statements, right? And we will definitely need the tax return. So it sort of goes up from there. But the base requirement is 3 months of bank statements.
Okay. So what is your minimum loan amount?
I think 30,000 would be our minimum.
Okay.
Yep.
And what is the minimum time in business and revenue requirement and the loan amount compared to revenue?
Minimum time in business is 6 months for a very small loan and a very high credit score. The time in business requirement goes up, as you can imagine, as the term increases or as the loan amount increases, but it starts at 6 months. I think up to $150,000, we require 1 year in business. And that's as the owner, right? As the owner of the business. You were asking also about, revenues and loan amounts. Essentially, we're looking for a minimum of $30,000 in monthly deposits.
Okay.
as a minimum. And rough, that becomes the loan amount.
Gotcha. Do you have a direct side or do you just work with brokers?
We do have a direct side. I actually launched it 6 years ago. That's how I joined IOU. We launched a direct channel called Zing Funding. And it was, I'll tell you humorously, just during COVID, for those first 3 years, it was like shooting fish in a barrel. For some reason, the competition had just shut down, gone home. And it was a great time of growth. And we were buying Google AdWords for about $1 a click. The cost per click now on Google for our industry is about $7 or $8. And basically, it's a break-even prospect for us now, and it generates about 5% of our total volume. So yes, we have a direct channel. And by the way, if you do not want to broker our deals, if you'd rather just send us leads, then it would be our direct team that would handle those leads and pay you a referral fee, right? So yeah, we do have a small direct channel, but 95% of our business comes through brokers, commercial lending brokers. And that's about $25 million a month now that comes from brokers.
Right. So some lenders focus on a quantity and diversity of deposits on the bank statement. If an applicant has one customer, regardless of revenue, the transaction would be a no-go. Do you have a minimum quantity of deposits per month from a minimum quantity of applicant customers?
Yes, we do. It's really annoying, actually. I've had this question a lot. We have a minimum number of deposits, and that number is 8. We don't look at diversity of, where the deposits are coming from, but we do require 8 deposits, which I get it. I understand the question. If you have one client and they want to pay you monthly, frankly, I don't see what difference it makes, but I guess the underwriters have some data. So yes, 8 deposits a month, but we don't care about diversity.
Okay. The question is, would you send their clients back in case they lost contact? So I think if I'm thinking correctly, that would be if a broker brought you a client and that client maybe comes back for more funding, would you loop the original broker back into that? Because I know sometimes the client may just go direct to whoever they're dealing with for one loan for a follow-up loan.
I got a 3-part answer actually a 4-part answer for that. It's all good. So number one, I will say, IOU Financial, unofficially, I would say we're the Boy Scouts of the alternative funding industry, meaning that we always do right by our brokers. Okay, so that's number one. So yes, point number 2 is when you refer a client to us and we fund them, we will start sending them renewal email opportunities. Once they are paid down 32% of their loan, we will start offering them renewal options. And if they take us up on that and they click on it and they accept a renewal offer from us, of course, you're looped in the whole time. And yes, you earn your full commission on the full renewal amount. So even if the renewal is paying off the previous loan, you would still earn your commission on the full gross loan amount, which is I think very favorable to the broker, right?
Yes.
There were a few parts to this question, and the third one is that if your client pays off his loan with us and doesn't renew, we generally reserve the right to market to them via our direct channel 6 months later. But that is a clause that we put in our agreement years ago to help us monetize the ridiculous volume of leads we were getting from our MCA brokers. I will tell you that we love equipment finance brokers a lot. For legitimate data, we can back this up with data. The reason I'm here today really is because our equipment finance brokers don't waste our time. They may not submit 500 applications in a month. It may only be 2 or 3, but they are really good quality. And so we're creating basically a separate program for our equipment finance partners. And we're giving you guys access to better pricing, better early repayment discounts. And when it comes to that clause in the contract, and when it comes to us being able to remarket to your leads 6 months after they've paid the loan off, we will take that clause out of our contract, and we will never market to your clients without copying you on the email and including you in the revenue stream. And again, it's because equipment finance brokers, the reason I'm here today and the reason I met you, Monica, last year is because I was looking at the data. We were trying to segment our brokers, and I was looking at the data. We have 600 active brokers, and we were looking at loan performance. And I'll be very transparent with you. The default rate across the board was close to double digits, meaning it was hovering under 10%, which is high, right? I know that must sound like scandalous to you guys, to this crowd. But we agree that's really high. But what I noticed was that we had a handful of 10 or 20 brokers whose loans were defaulting at normal, what I would call normal rates, we're down, well under 5%. So we started to look at who are these brokers, and more than half of them are equipment finance brokers. So what we found is that, unfortunately, a lot of our volume comes from New York-based MCA-focused brokers. And that's fine. It drives volume, but the quality is not where we'd want it to be. And what I'm doing here today with you, Monica, and this group is expanding IOU's reach into the equipment finance world because, again, compliments to you all, the quality of your clients is that much better. And, I think partnering with IOU to give you term loan offers for your clients, what it does is it helps arm you with options that keep your client from Googling short-term loan. Because once, I don't care if you're an excavator or a construction company, a restaurant, if you Google short-term business loan or business funding, you will fall into a vortex of MCA brokers and offers and email marketing schemes and outbound calling programs, and it will never, never end. So I know that you guys really look out for your clients, and I know that some of the resistance historically against offering alternative funding products other than equipment finance, there's been some resistance there because you're trying to protect your clients, and I respect that. But what I'm saying is that your clients are going to Google business loan if they need money. If you don't have options for them, they will fall into the Google vortex, and then essentially, it basically exposes them to that very competitive MCA world. So my value proposition of this group is, let's talk about how we can partner to provide you with responsible term loan options and protect your clients, right? And of course, create new revenue streams.
Absolutely. Last question. Are you looking for the client to have completed some business financing in the past?
Absolutely not. We'd prefer if they didn't, because if they've applied for business financing in the past, that means they're probably getting 10 or 20 emails a day from you name it. Their phone, they've probably had to change their phone number, so I would hope not. I would hope that, the ideal client is someone who has maybe been turned down by the bank and is just starting to explore alternatives. And if we can speak to them, if you can help us speak with them, or if we can help you fund them before they go to Google, again, we're doing them a pretty heavy solid, I would say.
Perfect. Well, it looks like that is all the questions, but I want to thank everybody for their participation. And I want to thank our valued funding source member and silver sponsor, IOU Financial. Thanks for a great job, Carl. We invite everyone to meet with IOU Financial in person at the Commercial Financing Expo coming up in October in Irvine. And thanks again for joining us, and have a great day.
Hope to hear from you all. Cheers.